So what's your take on this global travel debacle and how long this goes on for?
Yeah, I think unfortunately we've all seen it. Flights normally get cancelled at a rate of about 1.3%. Right now they've already doubled year over year since last year. And very recently we've seen that go up to about 5%. Flights being cancelled in the last couple of weeks, and and a huge amount of delays. As you've seen, there are big labor shortages going on, and about almost a quarter of flights are seeing major delays, especially in hubs like Chicago, New York, Dallas, Miami, Los Angeles. And so this is a serious thing. We've got nearly 50 million Americans who are planning to do some 4th of July travel. People do not want to put that off despite some of the challenges in the economy. And so we will see record levels of people going out and traveling again, but the disruptions are here and pretty serious, and something to bear in mind if you're planning to travel right now.
So what are you expecting to happen over this holiday week? Trends you're spotting in particular?
Yeah, we are definitely seeing that the amount of international travel and flight travel is much higher than it's been in the COVID era. I would also say that local experiences are up a lot, and the kind of things I think that we've seen people seeing as the top 4th of July experiences have definitely been things that might be considered a little bit more special. So shark diving in Miami, being able to go kayaking on the Chicago River. There are also some really cool and interesting experiences, jet skiing around the Statue of Liberty. And so definitely a lot of stuff, people getting outdoors on the water, making the most of the summer weather. But with 50 million Americans traveling, you're going to be seeing very, very busy attractions and experiences, as well as airports. And I think, you're going to see very congested highways as well. Road trips will be up.
Shark diving in Miami, that sounds fun. Look, you just won the Entrepreneur of the Year award from EY. Congratulations on that. Peak also just launched a partnership with JetBlue. What are your priorities for the year against the context, the backdrop of what's happening in the macroeconomy?
Yeah, I think what we've seen, for us as a business, we're basically Shopify for experiences. We help people book fun things to do, and we provide software for small businesses and large businesses to be able to get online. And so certainly the last couple of years, we saw that our businesses and the partners that we work with were hit pretty hard, right? And so we've had a lot of scale, nearly $2 billion of experiences through the platform. And you definitely saw that over the last couple of years, there were winners and losers. As we come out of the COVID pandemic, we are definitely seeing that consumers want to travel and they want to do experiences. And despite some of the things that we've seen with inflation and some of the recessionary kind of dynamics that we're seeing play out, people are still wanting to do that. And so we're not seeing that go away. Certainly for us, a few months ago, we just closed an $80 million round led by Westcap and Goldman Sachs, with the former CFO of Airbnb, Lawrence Tosi, joining our board. And so we're seeing a lot of momentum in our space, and we're seeing a lot of opportunity. And I think as we go into this next phase, of the next year, we are definitely helping empower our operators and partners that we work with to be able to get through, what will, I think, be some more challenging macroeconomic conditions. In this environment.
Interesting that Lawrence Tosi, the CFO of Airbnb, of course, former CFO, joined your board. We just heard about the stock there being down. How do you distinguish Peak and the future of the business from what we're seeing with a company like Airbnb, which, can be some sort of a barometer for consumer sentiment? Like, how are you as an entrepreneur, and what advice are you getting from investors about how to weather, a potentially significant downturn?
Yeah, I think one of the things that's very interesting about our business is that, first, we were profitable when we raised this $80 million round. And so we're a rare kind of, I think, tech business that had taken unit economics and profitability very seriously. And so we're actually in a fantastic position today around being able to continue to invest in growing our platform and helping our businesses get through this. I think also, our focus has actually been on the software side. So rather like Shopify, we're working with thousands of businesses and helping them take their business online, allowing their own website to be able to have real-time availability and online booking. doing. And so in doing so, the average business that partners with us sees their revenues increase by about 30%. And they see them saving a ton of time, hours and hours of automation that we provide. And so I think as we go into this macroeconomic climate, we're hearing from large businesses like museums all the way through to smaller businesses saying, we know that the bottom line really matters now. And it matters to us that we find ways to cut costs and grow our top line in an environment where perhaps there won't be as many travelers, rather like COVID, but there will be a local substitution effect. We think that people still need these moments of connection and joy. And what Peak really specializes in is everyday adventures. So the average experience on our platform costs about $50 to $100 per ticket. And so this is an environment where we will see businesses needing to make this leap forward on automation and technology, which helps them save costs. But we'll also be seeing, I think, consumers not maybe being able to do as many of these big trips, this summer being a place where a lot of people were able to go out and do that, and moving to local experiences within about 50 miles to be able to do fun things close to home.